This is a revision for the 2025 exam paper, MCM. Question number one, looking at the roles of the Lusaka Stock Exchange and the Securities Exchange Commission in Zambia. So what are the roles of the two? So these two have shaped the financial markets in Zambia. Their primary operations, um, ensuring that the investor, like you and me, are protected, information is transparently given, and they are in operation in what are called the capital markets. So we're going to look at the roles of each of these ones one by one. I'll be as brief since I've already given you. So we will look at the Securities Exchange Commission, which is a regulator, and the marketplace, which is the Lusaka Stock Exchange. So the roles of the Securities Exchange Commission is for licensing and supervision. So all licenses in the capital market, be it for individual participants, stockbrokers, fund managers, collective schemes, all these are licensed by the Securities Exchange Commission. So um, it is this house that provides depository, clearing, and settlement functions in line with the international standards that have been put. It is also with the role of investor protection. So by law, no company can issue securities to the public without approval by SEC. For instance, Zambia National Commercial Bank, which is a listed company, it underwent a SEC scrutiny to ensure that what they are providing is accurate and there's complete disclosure, and also it shields investors from misinformation. Enforcement. So it is only SEC that can penalize malpractice according to the statutory laws. For instance, we had Zambif in 2012 where there was misleading disclosures that were made by the company. So SEC had to investigate and impose fines, and the directors were banned to safeguard market integrity. The other function of SEC is market development. So it promotes financial literacy. We have a financial literacy week that is always running. SEC is one that spearheads that, and also capital market development initiatives. So through collaborations with universities and industry associations, so it fosters education on the importance of what financial literacy. On the other hand, we have the marketplace, which we call the Lusaka Stock Exchange. Coincidentally, they are on the same premises here in Lusaka. So one of the roles of this Lusaka Stock Exchange is capital mobilization. So it will enable companies raise their long-term funds on this platform through issuance of what? Shares through the IPO initial, yeah. So it will enhance project expansion. It is also a marketplace where secondary trading is fostered. Investors can buy and sell already existing shares, like Zaman Breweries, CEC, allowing liquidity, and also investors who are tired to exit the market. Price recovery. So it is through SEC that share prices are determined transparently through the demands of supply and demand, and also the fluctuations of shares will reflect the confidence that investors may have. It is through Lusaka Stock Exchange that clearing and settlement goes through. Lusaka Stock Exchange will ensure that ownership and transfer and payment and settlement is within the T+2 cycle. So in a nutshell, you need to understand that SEC is like a referee who wants to ensure that there's a fair play, whereas Luce is a stadium where the game will happen. So, part B, what are some of the steps and procedures that are on Luce? So, trading will follow certain standard procedure of fairness and efficiency. So, firstly, step one, you need to open a brokerage account. So, investors must register as licensed brokers. For instance, we have Bangia Securities or Stockbrokers of Zambia Limited. Secondly, you need to place an order. So an investor will submit a buy or sell order, for instance, buy 200 shares of Zambia. Then third, order matching. So orders are entered in the Lusaka Stock Exchange ATS, automated trading systems, and they're matched with corresponding bids or offers. Then trade confirmation. So once it is matched, a broker can issue confirmation notes detailing the price and volume and fees that are involved, clearing and settlement. So this one now is managed under a different umbrella using the T plus two requirements. So to ensure that securities and cash are exchanged within the 2 business days. Transfer of ownership. So the Exchange Commission will update these registers and officially will transfer the share ownership into another, the buyer. So these are the steps. Question part C, explain the apex statutory body for redress. So which one is our concord when it comes to issues to do with complaints or misconducts when we're dealing with the capital market? So SEC is actually the apex statutory authority where all complaints regarding such can be taken, right? Complaints regarding such can be taken. So we're still looking at so we have looked at part A using real world examples relevant to Zambia, the roles of SEC, identify the steps and procedures used when trading at LUCE, and name the apex statutory body in Zambia to whom customers can seek redress. 5 marks. Then using practical examples relevant to Zambia, what are the values which are supposed to be followed by companies trading at LUCE? So to look at values expected, LUCE listed companies like Zambi, so there's transparency, there should be regular and accurate disclosure of financial statements. For instance, these must annually and quarterly be reported. Integrity, they must avoid misleading statements just to ensure a good buy. I'll give an example of the 2012 Zambi SAG. Then fairness, we have equal treatment of shareholders. So during rights issues, the proportion is allocated, it must be observed. Accountability, the board remains accountable to the shareholders through the annual general meetings. Is this clear? Are we moving together? Question number 1 ends here. Okay, I've shared these notes already with you. Question number 2, money market is essentially a market for short-term funds. In light of this statement, state any 3 features of money relevant to Zambia's security exchange. All right, so we are looking at what? The features of the money market. So there are short-term instruments like treasury bills, whose maturities are 91, 182, and 364 days, and these are issued by the Bank of Zambia, pension funds, insurance companies. Secondly, the money market are there to ensure that there's liquidity, which is a provision of money to banks. For instance, Absa Zambia may borrow overnight a lot of funds from Stanbic via Intermarket Bank. The other feature of the money market is that of the OTC transactions. So unlike the Lusaka Stock Exchange, most money market trades occur directly between institutions and Bank of Zambia without any central platform. So here, money is short term, and Luce is a capital market, so it's a long-term investment plan. That's a key difference. Question number 3. Zambif issued a prospectus for subscription of shares. The issue was um, oversubscribed. Lusaka Security Exchange inspected the prospectus and found some misleading statements, imposed a penalty, and banned its three directors. Using the case above, identify the function and type performed by the Lusaka Securities Exchange. So, looking at this example I've been talking about, Lusaka here performed its regulatory function in investor protection, which includes protective regulations. So the function type is that of protective regulation, and the action taken was imposing fines and banned the directors and also corrected the wrong disclosures. So importance here is that it preserved the trust of the market and ensured that investors would believe in information that was disclosed to be reliable. So without such an oversight, we would be having people lose what confidence and would lead to capital flight and also reduced IPO participation. Question number 4. Am I too fast? Are we moving together? Are we understanding? Any questions at this point? Feel free to ask or add.
Hello, Mr. Collins, we are following. It's
Okay.
clear.
All right.
Sorry, we are together. We are together.
All right. Okay. So I will proceed. So we go to question number 4. Using relevant examples, Zambia discussed the role of financial markets in the Zambian economy, then discussed three forms of exchange exposures and explained the various risk management techniques that could be used to mitigate them. Okay, so here we go to this question number 4. So the role of financial markets in Zambia is that of capital formation. So they usually mobilize savings and take them to productive ventures. For instance, Madison as IPO funded microfinancial expansion functions. So these monies were taken to this discovery. So prices will reflect the company's performance. The forex rates will reflect the demand and supply. Liquidity, another role that financial markets will have is that of liquidating assets. For instance, uh, if you are trading, you would want to access monies as quickly as you can. It is these markets that will help you um, bet your assets into readily available cash. So just to go through again, we are talking about the role that financial markets play in Zambia, knowing full well that these are very important for developing any economy. And it is through these platforms that funds are mobilized, capital is efficiently allocated, and risks are managed. So the first is capital formation. So it is the financial markets that play a very important role in channeling the savings that come from you and me to productive investments. So they're there to bridge the gap between the savers and those that need to use the money. So I gave an example of Madison. The IPO was enabled through this platform. Then price discovery, which is a core function of financial markets. So they ensure that the asset prices will reflect all available information about the underlying asset value. So in the context of Zambia, the share prices listed on the stock exchange, they will adjust according to the company's performance. Okay. And liquidity provision. So it is the financial markets that will ensure there is liquidity for a vibrant financial market because it will allow investors to convert their financial assets into cash quickly with minimal price impact. So in Zambia, the Lusaka stock exchange, and commercial banks. These ones will provide platforms for trading equities, bonds, and other securities, thereby ensuring that investors can either enter or exit these positions as needed. So risk management. The financial markets also will enable the management by offering instruments that will help the firms, the investors to hedge against uncertainties. For instance, FQM, it's one of the major copper mines in Zambia. It faces significant risks from the volatile international copper prices. So through derivative instruments like the futures and options, FQM can hedge against these price fluctuations. Then also exchange rate exposures and risk management, like I mentioned. So businesses in Zambia, especially those that engage in international trade or those that maintain foreign operations, these ones are inevitably exposed to fluctuations in these exchange rates. So understanding these exposures and employing appropriate risk management strategies is very important to protect the profitability. So exchange rate exposures can be classified into transaction exposure, which arises when a company has payables or receivables denominated in foreign currencies. For instance, a Zambian importer may be purchasing machinery from South Africa in US dollar or in rands. So they may face a risk that they they may face risk that the kwacha may depreciate. So mitigative measures that can be taken if we're having forward contracts or currencies options. The other one is translation exposure, which occurs when a Zambian parent company consolidates its financial statements of foreign subsidiaries operating in different currencies. So the changes in these currency rates can impact the reported value of these assets significantly. So, so what is called economic exposure. So in a nutshell, what we're talking about is the Bureau of Financial Markets there, then the exchange rate exposures. In fact, this is the second part of the questions. They explain any three forms of exchange rate exposures and explain the various risk management techniques that you can use to mitigate them. So the three exchange rate exposures that we talked about. Number one, we have talked about what? Transaction exposure is a risk from the payables or receivables in foreign currencies. So the mitigative is engaging in forward contracts. Translation exposure, these are risks that come about in having your statements written in foreign currency. So you need to mitigate this by um, adjusting your balance sheet to hedge against such. So not that you are going to adulterate your figures, but you may borrow in foreign currencies so that you may offset this currency risk on your foreign assets. For instance, if a Zambian firm owns a subsidiary in a Eurozone, so it might just use euro-denominated loans to just balance that exposure. Okay, so and there's also economic exposure, the third one. Although um, we asked for three, it's important to note that economic exposure is one which reflects a long-term impact on the exchange rate movement on a firm's market value. So any changes in the Zambian kwacha value may affect competitive positions, the pricing strategies, and also the foreign demand for exports. So the Zambian exporters, such as those in the copper or agricultural sectors, are mainly sensitive to the US dollar Zambian kwacha fluctuations. So how do you mitigate this? By diversifying your markets and currencies, by sourcing inputs locally or stable currencies, or using natural hedgings. Okay. Question number 5. Explain the pros and cons of currency board. Outline reasons why the Bank of Zambia can intervene in foreign exchange market. So we are going to look at the pros and cons of this, then also look at why the Bank of Zambia intervenes. So when it comes to the pros and cons of a currency board. By definition, by the way, this is simply a monetary authority that pegs domestic currency to a foreign anchor currency at a fixed exchange rate. It's usually there to maintain full convertibility or holding high foreign reserves to cover the domestic currency in circulation. So in Zambia, this I've not heard so much of it. It hasn't operated as much, but let's just get the theoretical overview of this. Such as for exam purposes. Maybe in Zimbabwe it's there. So the advantages of such a board is credibility and low inflation. So the currency board can enhance the monetary credibility because it strictly limits the money supply expansion. So by trying the Zambian kwacha to stabilize the foreign currency like the US dollar, this board can prevent excessive printing of money. Okay, because those days we are at the point in Zimbabwe where just to meet the inflation, government kept on printing until they became so saturated and their currency ended up being what it is today. So countries like Hong Kong, the currency board has helped them maintain low inflation and investor confidence. In Zambia, something can be done. We had zeros cropped out at some point. The board also has an advantage because it will ensure fiscal discipline. So under this board, governments cannot finance deficits through the central bank. So it is this board that will enforce fiscal discipline to compel the government to maintain a balanced budget and to seek financing through debt markets instead of creating money. This board also is there for transparency and simplicity. So the currency board is simpler than discretionary monetary policy because this the domestic currency issuance is directly linked to foreign reserves. So investors and the public clearly understand the rules governing the money supply, which reduces uncertainty. So it increases transparency, and this transparency will foster confidence among investors and local savers. The disadvantages of a currency board. So the currency board cannot act as a lender of last resort. So it is no lender of last resort like the Bank of Zambia. They are there strictly to maintain that there's strict domestic currency with foreign reserves. Then second disadvantage is the vulnerability to external shock. So since domestic currency is not fully tied to foreign anchor, Zambia's economy becomes highly sensitive to external events like the US monetary policy changes. For instance, if US appreciates sharply due to the US Federal Reserve's, the Zambian kwacha would automatically strengthen. And third is susceptibility to speculative attacks. So fixed exchange rates under a currency board may attract speculative attacks if investors perceive the peg is unsustainable or if foreign reserves are insufficient. So this can trigger massive capital outflows. All right. So the last part, why Bank of Zambia intervenes in foreign markets. So Bank of Zambia is actively involved to manage the value of the kwacha, to stabilize its financial condition, and to also support economic growth of Zambia generally. So the reason why it must intervene is number one, to stabilize volatility. So frequent fluctuations in the Zambia US dollar exchange rate can disrupt trade, investment, and also planning. For instance, suddenly depreciation increases and the cost of imported goods and fuel fluctuations erode investor confidence. So Bank of Zambia is there to ensure that they smooth short-term swings. It also is there to build reserves. So maintaining certain adequate foreign exchange reserves is very important for a country like Zambia to meet import needs. So foreign exchange interventions are there to help Bank of Zambia accumulate reserves by purchasing foreign currency during periods of excess supply or selling reserves strategically. So adequate reserves will signal economic stability and also reduce currency risk. Then we have the issue of correcting disorderly markets. So in times of panic, speculative attacks, uh, speculative attacks, so market disorder can also cause sharp depreciation and appreciation of the Zambian kwacha. So Bank of Zambia interventions will inject liquidity into the market to restore the normal functioning. So, for instance, if kwacha suddenly weakens due to speculative selling, Bank of Zambia will just sell US dollars from the reserves to meet excess demand. And number four, beyond short-term stabilization, the Bank of Zambia can use interventions to influence the medium term and exchange rates. For instance, by gradually selling the US dollar when the Zambian kwacha is under pressure to depreciate. So the bank can just slow the pace of depreciation, thereby giving businesses time to adjust and also to reduce the inflationary pressures. So this strategy will often uh, be adopted. It is actually called leaning against the winds. It balances the market forces without fully fixing the currency. So, in a nutshell, what I can say is that these currency boards are there to offer benefits of credibility, fiscal discipline, and transparency, which can stabilize inflation and also promote confidence. However, these are rigid sometimes and they prevent emergency lending. They also leave the economy vulnerable to external shocks and speculative attacks. So, in Zambia, with the flexible interventions of the Bank of Zambia, it's there to allow stabilization of the kwacha to build reserves and also to correct some disorderly markets, thereby influencing trends whilst maintaining some policy flexibility. So together, these approaches are there to uh, highlight the delicate balance between credibility, between stability, and adaptability in managing Zambia's monetary and foreign exchange systems. So this is how this paper was supposed to be answered. Hope this was clear.